up, everybody? Welcome to Let's Talk Markets. I'm your host, Pink, with my co-host, Dave Lauer. How you doing, Dave?
I'm good. How are you, Pink?
Doing good. We are back from a bit of a hiatus, a bit of a spring break that we took, but we're back with a punch. There's a lot going on this week. The title of this week's podcast is Shorty Wanna Be a Thug. So we've got a lot to talk about with banking and short sellers and things like that. I want to start with, we did have really big plans for this week as far as the comment letters and everything. We were going to unveil a comprehensive point-for-point response to the hail of falsehoods that were recently fired in our direction. Together, we, the investors, submitted more than 5,300 comment letters highlighting the need for a massive market overhaul and offered realistic reforms supported by academic evidence and real-world studies and pilots. In response, defenders of the status quo have released the hounds, and not just on us, mind you. Citadel and Virtue have worked diligently to discredit anyone who threatens their money funnel. So SEC Chair Gensler is not excluded from that either. They've kind of set their sights on him. The other day, Virtue CEO Doug Sifu called us all grifters. And that was interesting. You guys kind of got in a little spat. So congratulations to everyone listening, and we, the investors, we are now officially a threat. Wouldn't you say so, Dave?
Yeah, I mean, I think that, he keeps gaslighting people. And, I got to say, my first reaction is, after I got annoyed and angry at it, I said, that's kind of awesome. Like, we're a threat.
Yeah.
they're coming after us hard in every way possible. It would have been one thing, I think, if folks like him and Citadel, but mostly Virtue, if Virtue had really argued on the merits and debated us, and we would have that debate anytime, anywhere, with anyone. But they haven't done that. It's been all ad hominem attacks. And he came on Twitter just to tell us what he thinks of us. And I like to play poker. I don't know about you, Pink, but in poker, we call that a tell.
Showing your hand there, buddy.
Yeah, that's right. And I've heard other things. Virtue is circulating this document around Congress that is just completely false and misleading and misrepresents the views of a lot of industry firms and misrepresents their public comment letters. I mean, it's crazy. An example, just a couple examples, right? Like Dimensional Fund Advisors, a huge asset manager. Virtue had them listed as part of the industry consensus against the best execution rule, against the order competition rule, and pulled a quote out of their comment letter to make it look like they're really against the order competition rule. Whereas, they say the opportunity to compete for retail orders could be a positive development, and we generally support market creative mechanisms that allow more market participants to interact with retail order flow. Our portfolios tend to be widely diversified, and we believe it likely our clients would benefit from the opportunity to interact with retail order flow. Does that sound like the kind of a firm, the kind of a comment letter from a firm who is opposed to the order competition rule, right?
It's grossly misrepresenting and cherry picking all of these things. I mean, we'll share the little infographic whenever we post this up. We've got to share that's literally circulating around our legislators right now. That's what is being represented to them as truth. And it is so offensively, grossly misrepresented.
Another crazy thing, they have the logos of a bunch of pension plans: Ontario Teachers Fund, CalPERS, CalSTRS, CPP, TRS. They've got the logos in there as if all of these firms agree with Virtue that there's broad industry consensus against these rules. They didn't even file a comment letter on most of the rules. And the only one they did was like a 2-pager that said, we support these rules. It's just wild. And this is just like, this is the tip of the iceberg. So yeah, we're when we thought that we were going to be combating, merit-based arguments, we thought we were going to be able to put together something pretty well, pretty quickly. The falsehoods and the lies and the misrepresentations kind of caught us off guard. Maybe that's naive, but
no, honestly, yeah. It was like, I thought we were all functioning adults that were trying to discuss, the topic at hand, and the level of, gaslighting, the term gets thrown around a lot, but they're just so used to controlling the narrative through media and through,
Yeah.
Every outlet. And now that we have established our place at the table, they're kind of panicking and they're like, no, look over here. We want to control the narrative still.
Yeah.
So it was quite offensive. And I think that retail investors should be offended at just how low they're willing to go. They're going Tonya Harding on us.
They've done this kind of stuff unopposed in the past, right? They've just been able to fling whatever they want, and it's worked.
Yeah.
So, we're going to try and make sure it doesn't work this time. And, lying, they're lying, and their ad hominem attacks are a pretty good strategy if they weren't going up against someone who could respond. But we're going to do that. We're going to make sure Congress understands the depth of the misrepresentations, and we're going to make sure their clients, like Virtu has clients, and they are misrepresenting what their clients think. And, we'll make sure their clients know that, and we'll see how they feel about that. So
absolutely,
that's something we're working on. We're going to be putting out both, a quick overview to show the falsehoods and the misrepresentations. We'll also be putting together a follow-on comment letter. So yeah, I would say stay tuned. For now, we're working on all of this.
Yeah. But that does, we want to focus again on, in spite of how negative the mud flinging may be, that means that they're paying attention to us. And that's awesome.
Yeah, that's right. And I can tell you
from his day hopping on Twitter to tell us about it. That means that we're in his head. We are living rent free in his head right now. So,
and it's not just on Twitter. It's, I talked to someone who is sort of working Congress, meeting with a lot of members of Congress in their offices to make sure they understand these issues. And he told me that every office he goes to, Citadel was just there, or they've already talked to them. We know that these guys are scrambling right now. And, if that says anything, it says that what we've been doing has been really effective. What the SEC is trying to do is really effective. And everything, I think right now is going in the right direction.
And we're proving ourselves a worthy, competent opponent. I mean, not even opponent, but just we were, thanks to the help of we the investors, Tiger Hill, we're going to have those guys on at some point soon, hopefully, we the investors lobbyists. We are presenting ourselves very well and reputably. And so there's nothing more threatening to them than a reputable opponent like us. So,
and I've got nothing but good feedback on our engagements with the chair's office and with the SEC, and those opportunities are going to keep coming. And that just tells you, that again, we've got that seat at the table, and it's a pretty unique one, not one that I've seen, an organization like this have before. So it's great to see.
And we continue to work on it. And even as we blow through one smoke screen, this week's headlines have been dominated by another. It's been all over Reddit. It's been crazy. Even Wall Street Bets is kind of making bets on what's going to happen. So the recent collapse of 3 mid-sized banks, we've talked a little bit about that in past episodes. Silicon Valley Bank, Signature Bank, First Republic, they qualify together as the biggest banking failures in the U.S. since the 2008 financial crisis. I actually have a little infographic that we'll share a link to as well that shows that in visual data as far as how big the 2008 crash was and how these 3 banks literally equal that. So that's something. After several years of microscopic interest rates, the Fed announced a sudden rise in interest rates at the end of 2022. It intended to dampen sharply rising consumer prices. It also sent a shock, though, through the middle tiers of the banking system. So institutional investors smelled the blood in the water, and they began betting hard against certain regional banks. And those of you that had the front row seats in the GameStop theater saga know exactly what this means. So the institutional investors began aggressively short selling stocks for the most fragile banks. It's kind of uncool, but it's totally legal.
Yeah. And, I think that short selling, and, a lot of people actually don't like it when I say this, but I think short selling is an important element for free and fair markets. And it's been shown conclusively time and again, markets work better when short selling is allowed, but, when it's done appropriately. And, if a stock is overpriced, it's healthy to be able to borrow shares from someone else, sell those to someone else, bet that it's going to drop in price, and you can buy back the shares at a lower price, and you intend on buying them back, pocketing the difference. The other investors betting the market's going to go up, you're betting the market's going to go down, and that's a market. That's good. That's healthy, right? But it's very different from what what I think people call short and distort campaigns or smash and grab campaigns, where the media, social media, traditional media, even regulators are used to spread falsehoods or to spread information by those who are betting against these companies, and potentially, as we're going to talk about in a bit, betting against them in what Jamie Dimon, the CEO of JP Morgan, called unscrupulous ways, right? And he really highlighted this in the banking sector, the thing that we've been looking at and seeing across the market in many different places. And I think there's a real question right now as to what the sequence of events actually was that kind of kicked off these bank runs, what tail was wagging which dog. And, was it I guess I should say, a concerted campaign that leveraged social media to bet and used by people betting against these stocks to precipitate a run on these banks? And if you look, there was a great thread on Twitter that I tweeted out, or I retweeted him from Bob Elliott, and he really dove into this, and he said, what drove the losses of the bank stocks? And he looked at PacWest and Western Alliance, and it was real clear: short selling and put activity. And that it wasn't just these individual stocks. KRE, which is has the fourth most traded options contract, that's the regional bank ETF, fourth most traded options contract that week, the first week of May, behind SPY, Qs, and IWM, right? So you've got this attack on the banks, this attack on the ETF, and it led to this feedback loop of people seeing the stock price crashing, hearing rumors that these banks were insolvent or borderline insolvent, leading to a deposit run, which led to the prices to continue to drop. And it led to this, what's called a positive feedback loop between sort of the banking run and the trading dynamics of these stocks. And, for some of these companies, like, they were relatively healthy. And this was more just a sort of confidence issue than anything else. And what Bob also said was, looking at data from the Fed showed that there wasn't much actual funding stress in the banking system at all. And once First Republic was resolved, the discount window dropped dramatically. There were big moves in the new facility, the BTFP, that was created in response to these issues. And then, if you look at sort of, deposits and deposit quality, and our deposits flying and fleeing, you don't see that. And so, I think there's a real question right now. And there was a Reuters article that said the SEC was looking into this. And then you had Jamie Dimon coming out and talking about it. So I think that the issues that we tend to care about, which are market structure and abusive short selling, we're kind of playing out at a different level with this run on the banking stocks.
Yeah, it's interesting how we've been yelling it from the rooftops for, almost 2.5 years now, because it affected retail and, a beloved retailer. But now, as with anything else, you come after the rich and their money. That's when regulation starts to change, and they start to, regulators maybe do start to pay attention, because you can't threaten their money. And so it's just been interesting to watch that play out on such a higher level, like you said, after coming from the degenerate Reddit crowd of, watching the GameStop saga unfold. So,
well, it's crazy. If you look at what Jamie Dimon said, he might as well have been posting this on Wall Street Bets.
Yeah.
He said, I love this quote. My folks tell me, so he's like, he said regulators should ban short selling on bank stocks. And he's like, my folks tell me if you analyze stocks and short sales, it's not that big a deal. I think they may partially be wrong, because, as you know, some people are unscrupulous and they use other means to go short.
So, I mean, what does that mean? Translate that for us, what he's trying to say.
What I think he's trying to say is, first of all, that the sky's not falling, and he has confidence. Look, J.P. Morgan stepped in, and they helped to resolve this crisis. At least we'll see. We hope, but that means they get bigger, and they needed a waiver from the Fed in order to do that. So now the concentration in the banking industry continues to increase. Too big to fail firms continue to get bigger. That's a big problem. That's a concern for everyone.
Yeah.
But I think what he's saying is that short sellers are making a lot of money and doing things in an unscrupulous way, such as using third-party groups to spread falsehood and disinformation, targeting stocks through various online channels, using social media to proliferate unchecked disinformation. Imagine that, right? And when he was asked whether there were those colluding on social media to drive down stock prices, Jamie Dimon said it's possible that's taking place. He said he gets it. It's difficult to prove these claims, but that's by design. And I think what he said was, in my experience, if something can be abused in this industry, and I'm paraphrasing, it will be.
Right.
And I think everyone understands and agrees that that's sort of the central problem. And if someone like Jamie Dimon is saying that there's not even enough transparency out there to determine what kind of short selling is taking place, whether it's legit or unscrupulous, as he says, whether it's being used to manipulate markets or not, I think that's a pretty strong endorsement of many of the reforms that we've been pushing for, and many of the things that a lot of people have been saying for many years now.
Absolutely. And the enemy of the enemy is my friend, right? So I mean, short term, it's good to know that there's such a big player that is sort of at least saying some of the same things and echoing some of the same concerns that we have. So that's interesting. We'll definitely be looking into how that plays out and seeing how, Wall Street Bets is a really interesting look into sort of the heart of what retail thinks about this. So it's been funny to watch this play out through memes. That's kind of how I've been keeping up with everything.
That's right.
And I saw something else about Robinhood starting 24-hour trading. Is that right? I don't keep up with Robinhood because Robinhood is evil, and I'm a purist when from the GME front, so I do try to stay out of that. But what is that all about?
So they are very excited that they're going to allow people to trade 24/5, so during the week, anytime. And I think people really need to understand what that means. Okay, so when you put an order in during the trading day from between 9:30 a.m. Eastern and 4 p.m. Eastern, you have a backstop for your trade called the NBBO, the National Best Bid and Offer. And it is a rule in markets that a trade has to take place, depending, assuming that it is of the size is not bigger than what's being displayed at the NBBO, that it has to take place at that price or better. But that's only something that exists from 9:30 a.m. till 4 p.m. Eastern. Outside of that, there's nothing, right? There is no protection whatsoever. Your only protection is that these firms are following their best execution policies and procedures, and that those policies and procedures are sufficient to get you a decent price. In pre-market and post-market, there's very little liquidity. Things are very volatile. These firms have complete control over the prices that they want to execute orders at. And this is not something I would ever touch with a 20-foot pole.
Exactly.
Or, that I wouldn't even trust it with that guy's money and someone else's account. I wouldn't even do it to them. Yeah. So,
those policies and procedures are internal, right? And so, you're trusting their internal procedures, which, we've watched play out all the way in front of Congress.
I've lost track of how many, I think well over $100 million of fines against Robinhood for best execution violations. And it's really hard to get someone for a best execution violation. It almost never happens. The saying is, it's like trying to nail Jello to a wall to enforce best execution. And yet Robinhood, of all firms, has been fined by the SEC, by FINRA, I believe by a New York Attorney General, but I'd have to double check on that. But they are someone, that is a firm that I don't understand how they're still in business. I don't understand how they still are allowed to be a broker dealer, given all of these violations, and it's always just a fine, and it's never any other repercussions than that.
Right.
So it's, I think there's more to talk about here, and we'll spend a little more time on it maybe next time. I know it's all being routed through some dark pool, through an ATS after hours, and I haven't really looked much into that. But there's no doubt in my mind that that's just going to be a place for all the wholesalers to sit and do whatever they want with.
It's a dark alley of the trading world, and I mean, $100 million in fines, and they're still standing unscathed as a company. That tells you just how profitable Bernie Madoff's PFOF really is. That really speaks volumes to the profitability versus the fines.
Yeah, Robinhood is the poster child for Bernie Madoff's business model. That's for
absolutely. Sure. And there's a lot of people eating well because of that, and are still profiting greatly. And I'm not seeing nearly enough like it's a trap memes anywhere about all of this. Like maybe I need to make one post.
That was how did you know? That was the first one I looked up when I wanted to
articulate that view. That's awesome.
I didn't do it, but yes, that's exactly right.
Yeah. So, kind of, of course, not financial advice, and then you make whatever decisions you like. But like Dave said, I wouldn't use my worst enemy's money to invest that way. So,
And
but that just presents
happening. There's maybe some context here that there is an exchange that has applied to the SEC for 24-hour trading. It has not been approved yet, I don't believe. So it'll be interesting to see, I think, what the SEC comes out with vis-a-vis that exchange and how that might impact, what Robinhood is trying to do.
Right. Which wouldn't be a negative. I mean, we live in a 24-hour world, but I mean, just getting down to T+0 is a fight. So it's, all of this just really highlights the reforms that we're fighting for with we the investors, with payment for order flow, with we could go on and on about the things that Doug Sifu's so angry about. I mean, there's plenty of reform to be made. So there's not a limited supply here.
Yeah, and I think that when you look at it, when you think about the banking crisis as well, and you think what can be done here, I think part of it is we need better disclosures on short selling activity. That's just a huge thing, right? If we don't have the disclosures today to determine what's going on, which Jamie Dimon says we don't, then that's something that really needs to be addressed. And part of that is through what's called 13D, 13F, and 13F2. So those are things that we, at least for 13F2, that was the first comment letter campaign that we the investors ran to say that short position disclosures should simply mirror long position disclosures. When asset managers take out a position of more than 5% in a company, they have to report that. That's 13F and 13D. And short sellers should have to do the exact same thing. And we should also include derivative positions in those disclosures. So that's something that we feel very strongly about. 13D is another one where we're starting to look into that and see that there are some issues there about activist hedge funds that can use attacks and manipulative campaigns to disrupt public companies and to try and attack them, or lead activist campaigns, which can sometimes be good but can often be used for manipulation. And so that's another area that we need quicker disclosure, more robust disclosure. I mean, there have been calls for real-time short selling activity disclosure. That's something we would support. Absolutely.
That's a dream, right?
Yeah, right.
That's the dream.
Exactly. And, that's the thing is a lot of the pushback you hear from these firms are like, oh, but if you had that kind of disclosure, it can be used to reverse engineer trading strategies, or it can be used to target short sellers, all this. But you know what? They have these disclosures in Europe, and they ain't doing that. and
Right.
it's working just fine.
Exactly.
It's like they don't want you to see what's going on over here, and they want to pretend that the U.S. is completely unique, and it's not. Like, we can learn from what other countries and other jurisdictions have done, and we can adopt best practices, and that's what will keep us, or at least put us back as the best markets in the world. Because if you look at it, we're not, and there are all sorts of reasons for that, but a big part of it is fragmentation and market manipulation, and part of it is like these lack of disclosures, because the opacity serves a lot of incumbents really well and a lot of hedge funds really well, and doesn't serve the rest of the market. But unfortunately, they're the ones who are the loudest and the best funded in their advocacy campaigns, and so that's just another thing that I think we can work on and try to address.
Absolutely. And there's no lack of astroturfing from these guys, like we talked about earlier with the infographic, and just they want to control the narrative. So it's something that we need to stay vigilant about as individuals in our communities online.
Yeah.
As we move forward with this, we need to remain vigilant, not only at the task at hand and to stay proactive, and to stay plugged into we the investors, what's happening and what we're proposing in the future. But it's just so important to stay vigilant to the conversations being had around us about this.
Yeah, that's right. Yeah.
And to just use your head, and make sure that who
Right.
consider the source whenever you.
Yeah, that's such an important point, right? So, one thing that these guys are doing is they're like, oh, look at this. The Managed Funds Association opposes this rule, as does SIFMA, as does the Chamber of Commerce, as does this guy and this guy. And you know what? Every time you hear that, you should be like, oh, so Citadel opposes it, and so does Citadel, and so does Citadel, and so does Citadel,
and Citadel's Chamber of Commerce, and Citadel's
all of these guys, the Committee on Capital Markets Regulation. Even when Robinhood is coming out, who do you think Robinhood's interests are aligned with? You the user, or their actual customer who actually pays them? Citadel and Virtu, right? So the funding of these organizations, which is known to some people, but not everyone. And sometimes reporters will quote these folks without context and without making it clear that, it's all coming from one or two sources that fund all of these different efforts.
Absolutely. And that's why it's so important that we prepare a proper response. A well-researched and well-articulated response does take time. Like I said earlier, we've got Tiger Hill working on it. Of course, you've been working tirelessly on it. We've got the whole team working on it. And we definitely do have a full response coming to the critics. And we don't intend to leave the gloves on for that one, I don't think. And I also can't wait. I think next week we should dive deeper into this whole Robinhood thing, because there's just so much that even your average investor isn't aware of even their business model. So I look forward to seeing how that plays out, and we can touch more on that next week. But we are just about out of time for today. We covered a lot of ground.
Yeah.
And it's nice to see that we're kind of leveling up and we're approaching more of a boss fight. The boss at least knows that we're like in the dungeon,
Yeah, it keeps getting harder. So we must be going in the right direction, right? Yeah.
So thanks everybody for tuning in this week. We will see you next week on Let's Talk Markets. Thanks, Dave. Thanks, everybody.
Thanks everyone.
See you next time.